Welcome, fellow traders. Sive Morten is here with the Forex Peace Army and with our daily update on the gold market. So in this video we talk briefly about the recent CPI numbers, why they had this impact on the gold market, why the reaction on the gold market is a bit different than on the Forex, because it's more than just numbers stand behind this. And second, as usual, is most interesting stuff. We discuss what we're going to do in the current situation in the gold market, whether it's time to buy, because in general, gold has reached the level and has completed the plan that we discussed yesterday. So first of all, on the CPI numbers. The recent numbers were slightly higher, but the point is that CPI released slightly higher in the recent few months, or at least according with the expectations. And it means that the prices are not dropping in the United States. Second, the tariffs might be already find a way into the numbers, and inflation might be rising as investors are actually worrying about this because of the tariffs by Donald Trump. This is the first moment that makes investors a bit nervous. Second, why actually we've got this reaction that you can see. It means that we should forget about any rate cut in July. And second, which we do not see yet, but obviously the pressure on Jerome Powell will increase from the Donald Trump administration because they haven't got what they would like to. Donald Trump every time was speaking about dropping on the inflation, attracting attention to different prices in the United States, but this time, and actually in the recent couple of months, we do not have any progress. And that will make him to become anxious and actually more angry on Jerome Powell, who probably will keep the rate intact. That explains why market pay so much attention to the recent numbers, although they were just 1 decimal point different from the expectations. The problem is with the tendency and with the first fruits of the tariffs of the Donald Trump policy, which actually makes the negative pressure here. So, but you can see reaction stands a bit different on the gold market and the euro currency. On the gold market, we see a faster upside response. That is because for the gold market, different factors act differently. So the rising on inflation in the United States currently is a more positive sign for the gold than negative, because Fed is limited with the possible upside of the interest rate. It means that the real rates will start turning to the negative more actively if inflation starts rising. And that is the really best background for the gold when the real rates are turned negative. Second, any increasing of the pressure on the Jerome Powell is a risk factor, and that also supports the gold. So from the technical point of view, take a look what has happened. Here's first of all, take a look that daily trend remains bullish despite the recent sell-off. And market start flirting with the MACD line, that the first moment that we intend to keep an eye on within the couple of sessions is whether the market will form any bullish grabber around it. If we will get it, that all the better. So we could get another factor that support possible upper direction here. On the 4 time frame chart, the shape of the retracement is clearly showing some kind of the ABCD pattern. And that creates the opportunity to consider taking the long position. Maybe not of the full trading lot, but at least at some part of the trading lot, because overall background is not absolutely superb, but still I think that it's worth our attention. So here on the 4 time frame chart, I keep everything intact. This is potential pattern that we could get. The question now is whether it will be formed or not. But for now, I do not see any reasons to just cancel it. So probably market is still keep chances to form it. Meantime, on the hourly chart, based on recent performance, we've got precisely the ABCD level. All our signal points that we talked about have held. So you can see trend line has not been broken. Double repo pattern on the 15-minute chart that we talked about worked just outstanding. You can see what has happened. So that was the factors that we mentioned to not be hurry up with the position taken if you haven't taken it here. Now you can see we have much better opportunity at the same levels that we talked about previously, even slightly lower. So how general position might be considered and whether it should be taken. Now you can see that we have 222. This reaction is already mostly has reached the minimum target, because 30% retracement is the minimum target of this pattern. But we still have the confluence support. A daily trend remains bullish. So it means that based on this most recent swing, here a strong downside momentum exists. Wait for a relatively deep retracement. So here might be more or less extended retracement. Market just need time and retracement to dump this pressure, to fade this momentum. And usually more or less deep retracement happens after such as a drops. That might be the opportunity to consider taking long position. Stops might be placed somewhere below the confluence. This, if we prefer to take the bet on existent upside tendency that we are trading here. If somehow this level will not hold and market just collapsed, that might be the sign of the possible further downside retracement, bigger retracement here. But for now, I think that's appropriate risk if we take position on some minor retracement here. But potential and opportunity might be really significant. So in the current circumstances, I would keep an eye on this scenario and see what will happen around this level. That's probably all for now. See you next time.